Dear clients, I'm Richard, Phillip CFD dealer. How time flies as you set foot into the second half of 2014 and market participants are switching back their attention onto their trading monitors from the FIFA World Cup matches. Last week, the US July economic calendar produces more evidence that the economy is firmly recovering as US employment growth smashed forecasts and unemployment rates fell to a 6-year low of 6.1%, which propelled the US equity benchmarks to end a holiday-shortened week at new record levels. The Dow Jones Industrial Average passed the 17,000 milestone and the S&P 500 rose to within 1% of the 2,000 level. Market participants worldwide similarly joined the summer melt-up as they drew confidence from a bright global outlook painted by the global policymakers. For instance, ECB stays committed to its pledge to keep rates low for an extended period of time. Furthermore, PMI reports in China show that factory activity expanded in June, indicating that the targeted stimulus measures that Beijing implemented this spring has stabilized the economy. Hence, global equity benchmark rallied broadly to an all-time high last Friday, while the MSCI Asia Pacific ex-Japan Index climbed a weekly gain of 1.7%, touching its highest levels since May 2011. On the cross-markets fronts as well, the US dollar, the US bond yields, and even growth-sensitive copper were also up for last week. For example, US Treasury yields hit a 2-month high, which in turn raised the dollar appeal. The benchmark 10-year yield ended at 2.64%, while the policy-sensitive 2-year yield stays near a 10-month high. On the other hand, oil and safe haven favorite gold came under pressure as the geopolitical tensions in Iraq and Ukraine receded. However, this week, markets took on a more cautionary tone when ushering in the 2Q US earnings seasons, despite Alcoa, the largest US aluminium producer, kicking off the earnings seasons to a good start as it reported sales and profits that exceeded analyst expectations. Market participants took some risk-on bets off the table while they assessed equity valuation levels against the prospects of forward earnings growth. In terms of relative valuation, the S&P trades at approximately 17 times PE, above its 5-year average of 14.3 times. That compares with a valuation of 15.4 times for the MSCI All-Country World Index and 13.5 times for the Asian Pacific Equity Gauge, as per data compiled by Bloomberg. And on the US earnings front, analyst estimates in Bloomberg show that profit at S&P 500 companies increased 5% in 2Q, while sales rose 3%. Note that these estimates have been revised down from April, when analysts had projected earnings to rise 7% and sales to increase 4% respectively. Finally, to wrap up on this week's key market events, of course we took note of market scrutiny of and interesting reactions to Fed's June's minutes released on early Thursday morning. Initially, Fed's indication that it was in no rush to begin raising interest rates, even as it began to plan an exit strategy from an era of loose monetary policies, lent some support to market sentiment. However, subsequently, market participants latched onto Fed's concern that financial markets are complacent, as evidenced by low volatility readings, to trigger a flow reversal into safe haven assets including gold, alongside Treasury and Japanese yen, at the expense of retreating global equities from the record levels. To conclude, amidst these market sentiment swings, it seems to me the key beneficiary is VIX, as it surged almost 3 big figures from 10 to 13. Well, hopefully, less complacencies and healthy doses of reality checks along the way will translate into further sustainable room for this 5-year-old bull market to run. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on trading opportunities in both rising and falling markets. In addition, you may also trade based on different strategies using many more benchmarks, which are available with Phillip ETFs. With that, I've come to the end of the presentation. Thank you. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.